I know like when I first started investing in real estate, there were a lot of people who were like, man, I'm not a great real estate investor because I missed the '08 crash and everything that happened afterwards, right? And they're like, I'm just waiting for the next crash. And now it was like post COVID, like, well, man, COVID's here. I don't know what I want to do. Like, I need to wait, and people who didn't buy during COVID, they're kicking themselves because property values doubled, right? Now it's like, man, interest rates are too high. Like, I don't know if I want to buy because I want to wait for rates to come down. And now they're going to be complaining about affordability next. So for me, it's like, it doesn't matter where the market's at. It's how can you adapt your strategy to match with where we're at today.
All right, guys, welcome to another episode of The Report. Today, I got a good friend of mine back in the studio for a second time. I was just out at his conference out in Denver, speaking, connecting with him and his wife and his crowd that he had out there. I'm a big fan of my man, Tony Robinson. Tony, welcome back to the show, brother.
Rich, thank you for having me on, man. Second time's a charm. And first, I just got to say, dude, I appreciate you coming out to Denver. People loved your presentation. You gave a lot of tremendous value, man. So thank you for coming out.
Dude, I appreciate you, man. It was cool to get out there and see the community that you've built, and all the cool people out there that I met and connected with, and even a lot of the other guest speakers were great and phenomenal. And so it was cool to catch up and see. I don't think I had seen you in quite some time before that.
It had been a minute, man.
Yeah.
So we're overdue.
Both you and Sarah. So,
Yeah.
but how's everything going, man? It's been a little bit.
Yeah, dude, just trying to keep growing, putting one foot in front of the other. We're dipping our toes in your part of the investing world with
Yeah.
the boutique hotels. That's keeping us busy. And yeah, man, just trying to keep growing.
I love that. And you guys just had a newborn recently, you and Sarah?
We did. Yeah,
What's the baby's name?
Baby's name is Zia.
Zia. Got to meet Zia out there in Denver. Super cute.
So she's growing fast, man. Almost a year old. So yeah, we're keeping busy. Family's growing, business is growing.
I love it, dude. And yeah, speaking of boutique hotels, you guys just took one down out in Utah, I believe, right?
Yeah, it was right outside of Zion.
Dude, I love that, man. Congrats, by the way.
Thank you.
Tell me a little bit about that deal. How did it come to fruition?
Dude, it had been a goal of ours for a while, and we had honestly failed at it several times before that. We had a boutique, it wasn't a boutique hotel, it was like a cabin resort that we had under contract here in California in Big Bear Lake, for those that are familiar with it. Very popular cabin destination, or like lakeside destination here. And that was summer of 21. And we just couldn't get through the raise. I think we needed to raise like 6 million, and we got to like 3.5. And like it just started drying up, man. And we had to end up walking away from that deal and lost the EMD, lost all your due diligence. And we waited about a year, tried it again. We found another property on the East Coast. Same thing, got like 60% through the raise and just couldn't finish it off. So this time around, I was like, well, what are the lessons that we've learned? Like, let's just start smaller. So we found a deal that was smaller, been sitting on the market for a while. We reached out to the seller with what we felt was a competitive offer, and they said yes, man. And we kind of took it from there.
Yeah, I love that, dude. I've had deals. I've gotten multiple deals under contract, and for one reason or another, maybe it's something that came up in due diligence. But I've had deals fall through, and it's always painful when it happens, and you feel like you waste a lot of everyone's time. But you always walk away with some sort of learning lesson that makes you a better version of yourself, makes you a better real estate investor moving forward. So I know what that experience is like, but I'm sure you guys had a lot of learning lessons baked in.
Well, 100%, man. I mean, for me, I think the biggest challenge is that having a brand by itself doesn't necessarily mean that you can raise money. Like, you have to do the work to cultivate those people who know you, like you, and trust you from the podcast, from social, from wherever, and get them to a point where they feel confident enough in you to give you a check for $100,000. And I think hubris maybe, or I don't know what it was, but maybe me just being somewhat naive to what the capital raising process looked like. Because we'd done it a lot on smaller deals, a couple $100,000 here, a couple hundred, like that we can do. But that was our first time going like multiple 7 figures. And I thought I could just like snap my fingers and have people lining up to give me, $6 million, and it didn't work that way. So it's okay. How do we really start building a pipeline and really focusing on that part of the business?
With the first 2 deals, did you guys think about bringing like a co-GP in to help you raise some money?
We did, and we had tried, but we were too close to the end of the contract window to have enough runway to get to that point. So we did bring someone else in who I think if we had more time, we probably would have gotten it done, but it was just too close to the end of the contract.
And I also feel like sometimes when deals like that unravel, like sometimes it's just not meant to be. And there might have been another aspect with some of those deals that maybe told you like, secondarily, like, hey, like maybe this isn't the deal that we're going to go 100% all in on. And then maybe like you were supposed to buy this one out in Utah. Sometimes I feel like you can't force things if they're not meant to be, and things will happen naturally and organically the way they're supposed to happen.
I do believe that, man. And like you said, it's not a failure. It's just like, hey, what lessons can I take from this to make me better for the next time?
Yeah. So tell me a little bit about that deal. So you guys bought out in Utah. How many units and
Yeah, so
what's
it's
the plan?
13 keys,
Okay.
and dude, it was a seller finance deal.
Nice.
We picked it up for $1 million, which is insane. You
Yeah.
know, like I have a 5-bedroom cabin in the Smokies. It's worth the same as this 13 key hotel that we just picked up. So yeah, 13 keys, $1 million is what they asked for it. We got it seller financed. So we put down 20%, and then we put about 400K into the rehab. So not a full overhaul, right? But really just more cosmetic because the bones are pretty good. And yeah, we bought it for $1 million, and if we can hit our projections over the next 12 months, it should be worth about 2.5 by the time that we're done. So a good solid base hit for our first kind of boutique hotel.
Yeah. I mean, doubling the value here in 12 to 18 months through renovation plan, better marketing. And I tell people all the time, like, man, that first commercial deal, that first boutique hotel, it's like, it doesn't need to be a home run. The point is to get in the game, get your feet wet, get the experience, get the reps in, and it gives you the confidence to go out there and to take down the next one and the next one and the next one. I think so many people hold out for like the perfect freaking deal, wait for everything's lined up. And in all reality, like there's no such thing as a perfect deal. There's so many things that come up and you don't know what you don't know until you go out there and do it.
I think you couldn't have said it better, and I've echoed that same thought so many times. Like, so you know, I host a real estate rookie podcast for Bigger Pockets, so I have the unique kind of good fortune of talking to a lot of people who want to get started as a real estate investor. And I tell them, like, I've never met anyone who retired off of their first and only deal.
No, that's so
It's
good.
never happened,
That's so true.
right? It's like your
Yeah.
first deal is just like you said, to give you that foundation, give you the confidence you can do it the second time and the fifth time and the 10th time. So, and you know, obviously I wouldn't encourage anyone to go out there and lose money on their first deal, but it's like, even if you just break even, the lessons that you learn are far more valuable than the cash flow or whatever else will come from that first deal.
Yeah, I totally agree with that. Speaking of the Bigger Pockets rookie podcast, what do you guys do? Like one episode a week? I actually, I got to be honest, I've never listened to it before.
We're 3 episodes a week right now.
Damn, you're pumping out 3.
3
Okay, I'm
right
doing
now.
the same thing. So you know
Yeah.
what that's
It's a
like.
grind, man.
And is it 3 like interview styles per week, or is it sometimes
So
solo?
yeah, so we'll do a mix. So we have some that are just like me and my co-host, or we'll do like Q&As, like, you know, we'll bring on answers or questions from
Who's the
guests.
co-host?
Ashley Care.
Okay,
So she's
same one that's always been, right?
always been, yeah.
Yeah.
So Wealth from Rentals on Instagram. So sometimes just her and I, and we'll answer questions from the audience, but the majority are us bringing on folks to do interviews.
Yeah. And how do you guys source all these guests? Because 3 a week is a lot.
I think, again, Bigger Pockets, I think having the platform and the reach that it has as a website, there's what, 3 million members.
So there's a
on-
long list of people that are
There's
just like
a lot
ready
of
to
people that
call
are
on.
applying to be on
Yeah.
the show. And I think just with the network they built, it's easy for us to kind of reach out to other folk and say, hey, who do you think might be a good guest? So there's a pretty steady stream of folks looking to get on.
Yeah, that's pretty cool, dude. So you're in the STR space as well. I know you're investing all over Joshua Tree, the Smokies. I've seen one of your deals that you had on like YouTube and Instagram about one of your first properties you ever bought in Smokies and how you guys got into it, little down, and had a good multiple there. What are you seeing in the STR market? What's going on in the STR market these days?
Yeah, I think, dude, we actually just put out a YouTube video. I think it should be either coming out today or tomorrow about like the hard truths of investing in short-term rentals today. I think there's a couple things, right? First, I think we all have to maybe set aside those 2021 expectations of what short-term rentals were, because there was this blip, right? This spike in the short-term rental industry where post-COVID, like, it doesn't matter what you bought.
Yeah.
You could have bought anything and you would have crushed it, right? And I think a lot of us kind of have that as like, okay, this is the normal, but it's not, right? It was the post-COVID kind of honeymoon phase. So what we're seeing now is that in order to compete, well, first, let me take a step back. There's a few things we're competing against, right? First is that there's more people on the platform. Just, there's no if, ands, or but about it. There are more hosts who have their properties on Airbnb. So you're fighting against more people for a growing number of eyeballs, but there's just more people to compete with. The second thing is that I think the expectations of guests have shifted quite a bit as well. We're finding that we've got to do a little bit more to still earn that 5-star review than what we had to
Really
do before.
interesting. Give me an example of that.
Dude, it's like, so I'll give you a real life example, right? Like, as you're leaving a review on Airbnb right now, I don't know if you stayed at one recently, but if you stayed at an Airbnb, when you're leaving your review for that property, Airbnb now has little prompts underneath each star to give you a sense of what kind of rating you should leave for that property. So when you're leaving a review for cleaning, it's 1 through 5 stars. If I tap on 4 stars, it says very clean. If I tap on 5 stars, it says extremely clean.
Mm.
So just think
So it's
about
easy to
that
get a
from
4-star.
like a guest perspective. Like very clean is going to satisfy a lot of people, right? But extremely clean, that's a bar that's a little bit harder for people to reach. So we're seeing a little bit more of that, where even if everything goes perfectly, we don't hear anything from the guests at all. We might get a 4 on some of these subcategories, sometimes even a 4 overall, and we reach out and say, "Hey, what's going on?" and we don't hear anything. So I think there's some challenges with guest expectations right now as well.
I feel like when I do stay in Airbnbs, I'm like the review process as a guest is like very lengthy. I'm like, since when did it become like
Yeah,
35 questions? I'm like,
right.
dude, I don't have the time for that, man.
So
I'm
you
a busy
didn't even
dude,
leave them
bro.
anymore.
Yeah. It was like you review every single aspect. Does this property have this and that? I'm like, dude, this is like a full-time job, man.
It definitely, but again, it's like that's Airbnb coaching the guest about, hey, what should their expectations look like? It was easier before because a 5 star to someone could be, yeah, everything was cool. Let me give them 5 stars. But now Airbnb is telling folks like, hey, this is what a 5 star looks like.
Yeah, yeah. So I want to circle back here real quick to something we touched on a second ago about canceling contracts. I just had to cancel a contract here on a property in San Diego, and it was going to be a 4-bedroom, 4-bath Airbnb. And it was kind of an ironic transaction. So I was selling a apartment building that I bought 5 years ago out in Cincinnati, had built up some equity. I had a buyer from New York that was paying top dollar for it. They even had non-refundable EMD, and I was like, great. And then I identified a property out here, and I was in a 1031 exchange. It turns out the seller of this Airbnb here in San Diego is already furnished and everything. They weren't using any dynamic pricing. They know me from my meetups. They would come to my real estate meetups. And I said, hey, what are the chances as soon as we get this under escrow, we send in the EMD, we can take over the management and we'll just do a master lease until it closes. So my team was already managing the property. And anyway, so this transaction was going on and on. The New York buyer ended up canceling. They were trying to do some crazy retrade, ended up canceling. I kept the EMD. We brought it back to market. And I didn't want to my buddy was the listing agent here in San Diego. And so I didn't want to not do what I said I was going to do. I didn't want him to have to go to his sellers and be like, hey, Rich wasn't able to perform. Because at this point, I already had the property locked up for like 3 months. And so I was like, dude, I'm just going to discount the crap out of the Cincinnati property. I'm going to sell it for a lot less than what I could get just so I can, can close this whole transaction out and not make you look bad. And so literally he calls me not even that long ago. He goes, hey, dude, we got an all cash offer for the same price that you wanted to pay. How are you doing on the other end? And I said, honestly, bro, take that offer. The only reason I was going to discount this property so much and do it is because I didn't want to make you look bad. And so it was kind of a win-win at that point. They ended up getting an all cash offer. That's going to be a quicker transaction for them. I had some seller financing component in there. The sellers didn't really want to seller finance. So it was a win for them. The listing agent, my buddy, he gets paid out sooner. And then I just told my broker out in Cincinnati, I'm like, hey, let's just take this off the market.
Let it cool for a little bit.
I don't need to sell it. Yeah. I'm like, I'll wait for the rates to come back down and I'll re-explore selling it when the rate environment goes down. So it's one less thing I got to worry about. We had a million things going on. And this being an entrepreneur, real estate investor, it's like, we're just putting out fires left and right. And so it's just one less thing I got to worry about. So I'm like, dude, take the fucking all cash offer. I'm cool with it.
Yeah.
So anyways.
I think there's, dude, we could spend so much time talking about juggling so many different priorities, but that's honestly one of the lessons that I feel like I've learned as I've matured as an entrepreneur, is that it's almost more courageous to say no to things as an entrepreneur, because every entrepreneur has shiny object syndrome. You want to go tackle everything and you want to do a million different things, but it's being able to really, really focus in on just one thing and driving that one thing to success is what I'm really trying to make the theme of, the rest of 2024.
Dude, and that's one of the things that I struggle with as I grow, is managing all these different arms of the business. And yes, they all wrap around, it's social media and the podcast, that drives a lot of what we do. It's almost like marketing, right? And then it's we're raising capital. We have a fund. We're buying boutique hotels. We're asset managing these assets. We're managing the construction and then the design team and then property management team, which self-manages all these assets. And so it all kind of wraps around, but they're all different enough. And then we have the masterminds, right? And that's online education. It all wraps around, but it's they're all pulling you in different directions. And so I tell the team all the time, man, if all I did was focus on the podcast, we would fucking really scale this podcast. Or if all we did was raise capital, we would raise a lot of capital. But it's you're pulled in all these directions. And so it's a balancing act as I grow as an entrepreneur that I'm just trying to learn and refine. It's how do I get better and better and better at the time management?
Dude, and we had Mike Michalowicz on the podcast a couple times now, and
who's that?
Mike Michalowicz. He wrote the book Profit First.
Okay, yeah, I've heard of him.
A big entrepreneur's favorite book. And one of the things he said, he was I know that the highest and best use of my time is talking to you guys on podcasts like this. He's like, very much what you said. He says, our business grows depending on how many stages I talk on, depending on how many podcasts I get on, depending on how active I am on getting the name and everything that we have out there. He lets someone else handle everything else, and I think that's the point that I'm trying to get to back in our business as well, is like, hey, how can I just focus on the things that I'm uniquely qualified to do?
Yes.
Because I can outsource pretty much everything else except this, right? I can't outsource getting in front of the microphone and sharing our story and talking about my ideas and philosophy. So it's how do we get back to more of that?
Yeah. No, I totally agree. It's and that's why I say like this era that we live in today is the best era in history of Earth and mankind to ever be alive. We got social media, podcasts, YouTube. You can literally learn any piece of information that you want in a relatively quick amount of time, and you can get around high caliber people relatively easily in today's age. And so, and then to build your personal brand and all that stuff is like so powerful when it comes to marketing. Then we got AI and all this technology. And so I think there's never been a better time to be alive, especially if you're an entrepreneur or real estate investor.
There's so much more opportunity, but I think it goes back to what I said before. It's like, it's so easy to scroll through Instagram and you see different people finding success in different ways, and you're not finding success because you're not focusing on one thing. So we're definitely in the age of opportunity, but we're also in the age of distraction. And it's like, how can you focus on one thing and not get distracted by everything else?
Yeah. So how do you treat that same problem in your business?
So when I made the decision to start investing in short-term rentals, and I'll go back because we kind of veered off here. I want to go back to the challenge that I'm seeing for today. But when I got started investing in short-term rentals, I told myself I don't want to do any other asset class except for short-term rentals. Like, I really just want to focus on getting good at this one thing. We're not gonna, I'm not gonna wholesale. I'm not gonna do this. I'm not gonna do storage. I'm not gonna do anything. Just short-term rentals. But then I realized even as I go deep into the short-term rentals, there's commercial. There's the property management side of things. There's the construction. Like, there's so many different pieces just within short-term rentals. So I'm trying to kind of peel away the layers and just get back on like, okay, what do I really want to grow right now? And honestly, I haven't decided yet. I don't know if it's like, do I really want to focus on more boutique hotels? Do I really want to focus on growing property management? Do I really just want to focus on growing our education in my own portfolio? Like, what do I really want to focus on? Because we have all these irons in the fire. So I don't have an answer. I'm still trying to figure out for myself, but I know it's a decision I need to make.
Yeah. No, absolutely. But like everything you just mentioned goes full circle, right? Now on the flip side, if you were doing like wholesaling and then you're doing self-storage and then you're doing boutique hotels, it's like that doesn't all correlate. But everything that you just mentioned does kind of wrap around. And sometimes like you need those other arms that actually feed the other arm of the business. So like the property management, which you alluded to, that allows us to be vertically integrated, to self-manage all these assets. So it's like, I don't want to raise all this capital and then give it to a third party to go manage these assets and be a custodian of my investor capital. And so, I want to sleep good at night, right? And so if one of our properties is struggling, I'm like, hey, we have a meeting right here in the office and we talk about it, we collab and we come up with ideas and solutions. And we're like, cool, let's pivot right now.
Yeah.
It's quick.
It's like the Apple model, right? Where Apple, it's like a closed ecosystem, right? And I do think there's value in that, but it's like, as I look to grow, because like same for us, like our management company manages our boutique hotel, right? But it's like, if I really want to grow these, like say I want to be the next Vacasa, because I really do believe that there's a big opportunity in the short-term rental industry for single family management. It's like, can I do that while I'm also trying to grow, Robinson Capital and buy more of those? So it's a decision that we have to make. It like, how big do we want to go? Because I think that'll dictate where we really focus our time.
Yeah. I'm curious how you guys treat your property management business, because for us, we really use it as a tool to like self-manage a lot of our own stuff. We do manage for like some third-party clients. A lot of them are just like friends of ours in the community, or they're like investors of ours, and we just kind of do it as a favor. But it's not really something that like we're trying to grow, and it's really like a non-profit type of thing. Like the goal with the property management is a break even, but allow us to have full control of the hotels and operate these hotels very lean. So we take a very, very small property management commission from the hotels, which really drives a little bit more NOI on the hotel side. But I'd be curious, how do you guys treat your property management company?
So ours is in the same vein as yours, right? Like we manage our own internal portfolio. We have some third-party clients as well, not a ton. Majority is still our own. And we run it the same way, right? Like we're definitely not generating a ton of profit from, if any, from the property management company. But I always question, like, is that the right thing to do? Because like, for example, we're in the Smokies, right? There are so many terrible property managers in the Smoky Mountains. And I mean that in the kind of nicest way that I can. But it's like when you look at some of the property managers that are out there, the majority of their listings have like 3.5 stars, 4 stars, and they have the little tag that says, this listing is in the bottom 10% of your market. And when I see that, I'm like, man, there's a big opportunity there to really go in and scoop up some of this low hanging fruit and really turn this into a profit center. Because when you think about from like a business perspective, the multiple you can sell for as a property management company is incredibly
Is
high.
it really? Okay.
Yeah. And it's like, dude, if we can get this to, an EBITDA that's like multiple 7 figures, we could sell for, 8x that potentially.
Mm,
So that's what I'm thinking of in the back of my mind. It's like, okay, if we can really turn this into a true business, what does that exit look like down the road?
yeah. I know like Patrick Switek, he's like trying to buy other property management companies to kind of build out the portfolio. I think that it's definitely a play. It's definitely a play like you alluded to. If you want to go after it and do it. For me though, right now, I'm just like, I don't know, the property management side, at least for me, and like luckily like I got an awesome team and they like love doing it, but like it's just putting out fires and I'm just like, holy fuck, it's not for me.
It is, man, and that's the thing that we, and that's the thing that we think about as well. But it's like trying to put the right people in place to drive that, so we don't have to worry about it as much. But it is a decision to make.
Yeah, absolutely. So on the hotel side, what are you actually, let's circle back to our let's close the loop on that first conversation.
Yeah.
Why the STR stuff is not what you thought it was from 2021.
Yeah. So we talked about the increased competition. We talked about the increased guest expectations. So those are like two hard truths that we're going against. The interest rate environment right now is making it a little bit more difficult just for all real estate
Yeah, I
investing.
mean, when the rates were 2.75 is a lot
It's
easier
a lot easier
for
to buy
deals to
anything.
pencil. Yeah.
Yeah, right. But it's 7, it's
Yes.
a little bit harder. So you have all those things that you're fighting against, right? But here's the kind of decision that we've made strategically across our portfolio. We're still looking for opportunities to buy, like we, just like you were putting offers out, but we're trying to find offers that kind of match our buy box. But we're not just sitting pat. So with our existing portfolio, we've been going back and reinvesting into almost every single property that we have where the performance isn't where we want it to be. So we just spent, $100,000 redesigning our backyard and adding a pool. And we're now that we've seen the success of that, we're adding an in-ground pool to other properties right now. We've added game rooms to a lot of our properties that have the space to try and increase the guest experience. We put a mini golf at one of our properties. So really just trying to understand, hey, what are the things that we can do to invest back into our existing portfolio to get that return? Because there's a lot of people who say like, okay, say you got $100,000, you could take that 100K and deploy it into a property right now. And if you're doing solid, maybe you're getting a 15, maybe a 20% return if you can find like a killer deal on the short-term rental side. Or you could take that 100K, split it up, say you take 20, 20, 20, and 20, put that reinvested back into your existing portfolio, and you might get a 50% return on that money by reinvesting back into your existing listing. So we're trying to make that decision right now of where does it make more sense for us to deploy that capital.
I love that, dude, because I think often as real estate investors, it's easy to like get done with a deal and then move on to the next project and then move on to the next project. And I think as you grow, it becomes more and more challenging to be as efficient managing as you were maybe with just 1 or 2 deals. I remember my first Airbnb I ever had, I was the manager. I was the one doing like the guest messaging and all that sort of thing all myself. And I was the one doing the pricing. And it was like the attention to detail that one listing got, because that was all I had, was like phenomenal. And then once you scale to all these listings, it's like it's harder and harder and harder to give each property the amount of attention that it deserves. So I love that you said sometimes the best use of your money and your time is to go back, not to go buy more, but to go reinvest and figure out how can I get a little bit better with each of the existing properties in the portfolio. I love that.
Dude, two things that I'll say that I learned kind of going through this experience. First, there's this resort that I go to in Mexico.
Okay.
Have I shared this story with you before?
Where do you go in Mexico? Remind me.
It's God, what's the name of it? It's called Escaret. It's
Okay.
Escaret in Cancun, Playa del Carmen. But dude, we go down there a couple times a year, and I bring it up because every time that we're there, we see them fixing and improving something at the property. It could be someone's replanting new plants. It could be, I've seen them like repainting the staircase. I've seen them, whatever it may be, but there's always like little touches that they're doing to make sure the property stays fresh. And I think that was something that we were missing in our portfolio. Like you said, we set it up and we're so focused on the next one that we're not going back to see, hey, what do we need to do to make sure this listing continues to perform at a high level? So that was like a big lesson for us. And it came from seeing, massive, there's, I don't know, like 3,000 rooms at this hotel. It's like massive. Seeing how they do it and trying to translate it back into our much smaller portfolio.
Yeah, that's a really good takeaway, man. And it's just so true to just be able to always take care of the deferred maintenance, but also slightly improve these properties. Whenever you replace certain things, like flooring or landscaping, it's like you can make it slightly better as well, which is going to increase your ADR and ultimately your RevPAR and the valuation, especially for these boutique hotels,
All of it, man.
which is huge. So which markets are you guys currently in right now, portfolio wise?
So we're in 4 states right now. So we're in Utah, we're in California in Joshua Tree, the Smoky Mountains. Then we have some arbitrage units in Dallas, but we're actually probably going to be exiting those here shortly. So those 4 locations right now.
Yeah. And of those, which one are you most bullish on?
Probably, dude. It's actually a good question. I think Utah, where we're at in southern Utah, I think there's a big opportunity there, but you've really got to, if you're going with like a single family home, I think you really have to lean into like the unique experience. But I still think there's a lot of opportunity in the Smokies right now because, like I said, there's a lot of cabins that are out there that are grandma's cabin, and we even have some ourselves we're redesigning right now because we're not happy with what they look like. But I feel that there's a big opportunity to kind of elevate to the top of that market. Joshua Tree is harder because when you look at like the really top of the market in Joshua Tree, it's like uber luxury, right? Like
Yeah,
have you seen the Invisible House?
I have.
Yeah,
Yeah,
like
it's sick.
you can't compete with that,
Right.
like there's nothing I can do
To
with my
compete.
properties to compete with that. But when I look at a market like the Smokies, even the top 10% of that market, I know, okay, cool, I can compete with those guys. So as we're looking for new opportunities for new markets, we're really focused on places where the top 10% are properties that we know that we can compete with. So it might not be the big blue chip markets anymore. And it might be somewhere that's like, random parts of Ohio that you wouldn't know unless you go there. And we've submitted offers in a lot of different places that may not be big national destinations, but for folks in those pockets of the country, they know they like to vacation there.
Yeah, I love that, dude. Yeah, I think it's interesting because with traditional real estate investing and people that invest in apartments and long-term rentals, most people I hear them say, "Hey, I want to go into landlord-friendly states, places without a lot of bureaucracy and red tape." But with the boutique hotels, we actually kind of think opposite. I think, "Hey, I want to go into more liberal areas because those areas tend to have more red tape, higher barrier to entry, but also tighter short-term rental regulations, which is bringing more demand back to the hotels." And also, I mean, I just had Mikey Taylor on the podcast, and he's doing a lot of ground up development in some of these more liberal areas where it takes 3 years, 3.5 years to get permitting to build. And he's like, dude, I love all the fucking bureaucracy here in California because it's challenging for competition to come in. We don't have the risk of oversupply. And so it's interesting to see how different real estate investors tackle different markets and have their own strategies that both work. But it's like you got to pick and choose your spots, you know?
Have you seen the data on what happened in New York City after the short-term rental ban for
No, what's
hotels?
what's the data?
Dude, it's like the ADRs for the hotels or the RevPARs have gone up like 20%, something crazy like that since all these short-term rentals have gotten banned. It's because where else are they gonna go, right? All the people that were staying in the single family
Yeah,
homes,
the people are still coming.
people were still coming, but
Yeah.
now they're forced into a constrained supply of listings, right? So they're charging more.
If you love real estate investing, passive income, and tax benefits, but don't have the time, my company, Summers Capital, is buying boutique hotels right now. We source the deals, we renovate the properties, and we even handle all the day-to-day management, making it truly hands-off for our investors. If you want to learn more to see if we can help you, visit summerscapital.com/invest to book a call with our team. Again, that's summerscapital.com/invest. Now back to the show.
Now, on the STR side, are you like, if someone's new out here listening to the podcast and like, hey, I want to go buy a short-term rental, it's my first one, would you suggest going into a market with existing regulation or going to a market that doesn't have any regulation?
I will almost never invest in a city that has no regulation. And I guess I'll caveat that because it very much does depend on the type of market. So let me take a step back. Whenever we look at a market in general for short-term rentals, if we know that it's only going to pencil as a short-term rental, like say we could midterm or long-term because it doesn't make sense, I'll want to make sure that that city is economically dependent on the revenue generated by short-term rentals,
Mm,
right? So we talked about New York City, we talked about the Smokies. So let's like contrast those two
yeah.
cities. When you think about New York City, what drives that economy? Literally any and every industry you could think of exists in New York City. You have major sports teams, you have Broadway, you have business headquarters. That's major financial capital of the world. There's a harbor that like anything you could think of exists in New York City. So what incentive do they have to protect short-term rentals? Absolutely none. You think about the Smoky Mountains. There's no college, there's no business headquarters, there's no, there's nothing driving that economy except people coming, staying a couple of nights, spending money at the local businesses and going home. So they are financially incentivized to protect short-term rentals. So for me, that's what I'm looking for, is that type of market.
Yeah, I love that. Alignment of interest is huge. What are some other markets that are like that, like the Smokies, where the local municipality benefits from the Airbnbs?
Dude, I think any place that's like a true vacation destination is probably going to lean that way as well. Like I was on a call with some folks from the city of Joshua Tree not too long ago, and they said that the number one revenue source for the city was property taxes. And you got to imagine a good chunk of those are probably short-term rentals. The number two revenue source was the transient occupancy tax
Mm.
paid by short-term rental host. And the number three was sales tax. So people spending money at local businesses, which again, probably a lot of folks that are staying at short-term rentals. So for me, I'm looking for places like that. There's no business headquarters. There's a smaller permanent resident population, right? If there's more, if the number of tourists far outweigh the permanent residents, it's probably a good vacation destination. So it's those kind of cues that I'm looking for. And again, any major vacation spot's probably going to apply to that.
Yeah. I'm curious to see where the interest rate environment goes. There's been a lot of talk here the last couple of weeks about the Fed doing some reductions starting in like September. And there's some more news came out today, like Jerome Powell's not going to wait for the inflation to really come down to 2% before they start dropping rates. So it'd be interesting to see kind of what happens. But from the Airbnb side, looking forward, it's like, or maybe just real estate investing in general. I'm actually like impressed with the fact that the rate environment has more than doubled for the last 2.5 years, and real estate pricing in most markets around the country have remained relatively stable. Like you didn't see the big discounts out there that I thought you would have seen. I think is a testament to how strong the supply demand fundamentals really are for real estate. And you can't forget the government's printed 80% of the money supply in the last 4 years. And so I think when the rate environment does go down, if in fact they do it, I think we're going to see a lot of appreciation again, and we might see rent growth and all that sort of thing kind of trickle back, and a lot of buyers re-enter the marketplace.
I'm nervous for that part, man, because
Yeah.
like, and I keep telling folks, it's like, right now we're recording this in the summer of 2024. And like you said, rate cuts are potentially coming before the end of the year. When that happens, especially if rates get below like 6, like I feel like it's going to be just like how it was a few years ago, where you got to go in, hard EMD on day one. I'm gonna go 100K over asking, no contingencies, like take everything that I got. So I'm telling people, it's like right now is a really good time to still get good deals. Like we put an offer in on a cabin a couple weeks ago in the Smokies, and they'd initially asked for like 1.3, and it had just been sitting for a while, right? I think when we made the offer, it was down like 975, offered 700. And you think most people wouldn't even want it, but I put it in like, what's worth it? And they countered at 850. That's not going to, 6 months from now, I feel like it's going to be really hard to do that because there'll be so many more buyers in the pool trying to get that same property.
Yeah. So did you guys accept the counter?
I need a 700.
Yeah, that's what I've been telling people. I'm like, if you can buy in a good location and you can buy something right now to where you can get it at a discount and you can add some value. I always try to buy stuff to where there's a clear path to add value. I have no problem buying right now because, like you said, all the competition is on the sidelines, and this is the right time where you can get in. No hard EMD, you can get the discounts out there, and even like markets that have been staying on the or deals that have been staying on the market for 180 days, 365 days, they go stale. And just because the seller had some sort of expectation that maybe was high a year ago, well, guess what? They haven't had any activity, they haven't had any offers in 12 months, and now you come in with an offer, and maybe their expectations change. People go through divorces. People get uprooted from jobs and that sort of thing, and they need money. And so you never know. And so I think there's opportunity out there. And I'm like, guys, this window is not forever. This high rate environment is not forever. And before you know it, like things are going to turn around. The bad news in the marketplace is going to change. And that's when all these buyers are going to come to the party.
It's like, dude, people will always find an excuse, right? It's like, I know like when I first started investing in real estate, there were a lot of people who were like, man, I'm not a great real estate investor because I missed the '08 crash and everything that happened afterwards, right? And they're like, I'm just waiting for the next crash. And now it was like post-COVID, like, well, man, COVID's here. I don't know what I want to do. Like, I need to wait, and people who didn't buy during COVID, they're kicking themselves because property values doubled, right? Now it's like, man, interest rates are too high. Like, I don't know if I want to buy because I want to wait for rates to come down. And now they're going to be complaining about affordability next. So for me, it's like, it doesn't matter where the market's at. It's how can you adapt your strategy to match with where we're at today, right? And people are always buying deals. It's just how can we make sure that the deal works today?
Mm-hmm. Yeah, dude, I agree with that, man. There's always naysayers out there, man. And I heard it like even after COVID, people are like, or right when COVID dropped, like, hey, don't you regret buying right now? And then, like you said, it's the rate environment. Now they're going to be talking about affordability, and it's like those same people on the sidelines will always be on the sidelines. The people that wait for perfect conditions never play the fucking game. And for me, it's like the point of the game is to continue playing the game because you don't know what you don't know, and there's going to be mistakes. Shit's going to go wrong. Like every fucking deal doesn't go according to plan. And the idea that you're going to have this perfect freaking plan and deal before you start any journey, it's not just real estate, but like starting a business, whatever it is, maybe it's a new hobby. It's just like, it's fictional, you know? So it's crazy how that works. I'm curious for you, man, because you kind of came from a similar background as me, being a full-time, W-2 employee. I was 11-year government employee. You came from the W-2 background as well. And then now you're full-time real estate entrepreneur, real estate investor. You've been doing your thing for several years now, but I have a lot of takeaways looking back, but like, what is your biggest takeaway looking back, coming from that background to now being full-time real estate investor entrepreneur? Because a lot of our listeners to the show, maybe have full-time W-2s and they're looking to get out there and become a real estate investor and be fully on their own. But like, what's your biggest takeaway? I'm curious.
Yeah, man, dude. I feel like I have a lot, but I think the ones that are maybe most important are you've got to start building something, right? Like I lost my job, so I was like thrust into the world of real estate or entrepreneurship without really being ready for it. But I was able to make that transition because I've been building while I was working that W-2 job. And like you said, people wait for the perfect time, and that time may never come. So just do something today to start laying that foundation. Like if you're working your job and you want to exit whatever 3, 5, 10 years, whatever that time frame is, you have to start laying the foundation today, right? Because otherwise nothing's going to happen. So that's the first thing, is start taking action today. I think the second thing is having some sort of like nest egg, right? Some sort of cushion financially, so that when you do take that leap, you're not worried like, if it all goes to shit, like what am I going to do? And for us, we had a decent amount of savings that we put together through our years of working our day jobs.
Did you guys have retirement funds, like a 401k that you guys tapped into to utilize after you left?
We didn't. I mean, we had like a very small 401k, but most of our money was in stocks. I worked like in the tech industry, so a lot of our compensation was in the form of like stocks that the company gives you. So majority of our wealth was tied up into that. So we had a good chunk of it, and that really gave us the foundation to say, hey, let's try it out at least for a year. And if at the end of these next 12 months we realize that it doesn't work, all right, cool, no harm, no foul, we'll go back. But we had that foundation.
Were you guys scared back then? Because I remember when I first got in the game, like little things were like, oh fuck, like this is like kind of scary. And now all those things after I do them over and over and I push my comfort zone, I look back, it's not. But were you guys scared in that process early on?
I mean, I don't think I was necessarily scared, except for in that moment when I lost my job, right? Because we were doing pretty well as W-2 employees, and my wife wasn't working at the time. Like it was just me, I already had a kid at home, like had a more like all the American dream stuff we had. So to see the income go to zero, that was a scary moment for us. But I think when I took a moment, I kind of like surveyed our entire situation. I realized I didn't really have a lot to be afraid of, because I knew that we had at least enough cash to get us through, a year or two of us just focusing on the business. And my worst case scenario, like say that I tried this for 12 months and I absolutely failed. My worst absolute case scenario is that I go back, get another job that pays me a healthy 6-figure salary, and then I live like every other American does.
Yeah.
That is my worst case scenario. And when I had that realization, I was like, why not? And I still tell myself that today. I was like, dude, even if my business fell apart today, all the different businesses we built, I can hang my head high because I know that my worst case scenario is living like the majority of the other people on this planet.
I love that you say that, because I look at every decision that I make as like, what is the worst possible scenario or outcome? And am I okay with that worst possible outcome? And if I am okay with it, because often the worst possible outcome is like, I'll be in the same spot 6 months from now than I am today. And I can always go back to that day job. And then what is the upside? Well, if there's a lot of upside, maybe the upside's infinite, then it's like, why would I not do it? It's almost a risk-free proposition. So I love that you said that.
Yeah.
Yeah. So anyway, so I think for the person out there that's looking to like, get out of the full-time thing, I think the takeaway for me, the biggest takeaway is like all those risks that people allude to are real. And I heard it from coworkers, family, friends, and it's all because they care. But a lot of those people that have never done it and they've never quit and gone full-time on their own, they're the ones that are going to tell you not to do it. And so I think the biggest takeaway for me is like, be careful who you take advice from. And if you really want this bad enough, you need to get around people that are also doing it and that have actually done it. So if someone's giving you advice on how to buy real estate or how to quit your job and they've never done that before, it's probably not someone you should be listening to.
Dude, I always tell people, and I tell this to myself as well, it's like well-intentioned people can sometimes give you the worst advice. And unless you've achieved the thing that I'm trying to do, I'll be kind and polite when you share your advice, but it's going one ear and out the other, right? Because if you've never quit your job to go and build a business full time, what value does your advice actually have? And I don't mean that in a mean way, but it's just factually speaking, you have no frame of reference to even give me this advice other than the fears you've built up for yourself.
Yeah, I completely agree with you, dude. It's crazy to think, and sadly, I think the biggest challenge and biggest hurdle for a lot of these folks out there that want to go buy their first real estate deal or they want to start that business is they're just in these networks and the circles of people that are going to be naysayers and they're going to talk them out of it. And sometimes it could be the spouse. And so I see it so often where someone comes up to me in a meetup and they're like, hey, I really want to buy a real estate deal. What do you suggest? And I'm like, I recommend. I'm like, hey, go read this book, go talk to this person, start going to networking events, listen to this podcast. And then I'll see them 6 months later. I'm like, hey, what's up? And like, hey, like my wife talked me out of it, or like our plans got busy, we had a kid. And it's like, dude, like it sucks because like I know these people want it, but they're just around the wrong circles,
And just like really quick on the spouse piece, Rich, because I feel like we get that question a lot. Like, how do I get my spouse on board? Especially for me, because a lot of our content is me and my wife together. So people see that like, Tony, how are you guys doing it together? And the first thing that I tell people is you have to become someone that's worthy of getting that support from your spouse. Because sometimes someone who wants their spouse to get on board is the same person that has a different idea every other week, and their spouse has seen them never truly commit to anything. So why would they be okay with you saying, hey, let's go liquidate our 401k for this crazy idea I have about real estate? So I think you've got to kind of look yourself in the mirror first and say, like, have I done the things to prove myself worthy of getting my spouse on board?
Yeah, that is a very fair point. I agree with that. And so what would that person do in that situation to make the wife feel more comfortable that they're worthy? Because the only way you become worthy is to go out there and actually do it.
Commit to at least the education side of it,
Okay.
right? Like wake up every morning while your wife is still sleeping, or your husband if you're the wife, and focus on reading, listening to podcasts, and then share with your spouse during breakfast, dinner, whatever it is. Like, hey babe, here's what I heard today. Here's what I learned today. Hey babe, I'm gonna go to this meetup that Rich is hosting in San Diego. I'll let you know how it goes. You want to come with me? Hey babe, I just watched this YouTube video. You won't believe what I just, babe, we've been talking about it. Just like start educating yourself consistently and showing your spouse how you're taking this seriously. Then just inch by inch, start trying to pull them in a little bit more.
Yeah, I think that's really good. And also, like, I think with all the education that's out there, podcasts, YouTube channels, networking events, you can go to conferences like you just hosted out in Denver, even getting around masterminds. Like there's masterminds out there where 10, 15 years ago, masterminds were never a thing. So you can get into these communities where you're around other people that are movers and shakers in the prospective field. And I think that alone is going to shortcut your path from point A to point B, and even maybe partner with someone that's done it before. And then you go to your spouse and be like, hey, we're going to partner with someone that's done this a dozen times. And so I don't know. I think there's ways out there. I'm not married, but one day I will be. And, I do know one thing is like, I'm not going to be marrying someone that's like going to be holding me back.
Holding
That's
on for sure, man. But here's the last piece on the spouse part too, man.
Yeah.
It's like, I think you've got to recognize that there's different levels of like getting your spouse on board. Like there's the level like me and my wife are like, we're business partners, right? Like she handles parts of the business that I know nothing about. I handle parts of the business that she knows nothing about. That's like true business partners. But there's also elements where your wife or your husband is just supportive. They're like, hey babe, I trust you. I believe in you. I have no interest in real estate, but I trust you. And I think so many people, they get stuck because they want to get to the partnership level when you should just be happy with the supportive side of things and not force the issue too much.
Yeah, that's a good point. I'm okay with like either. Like I'm not married, but I'm just thinking of like an ideal like partner for me. I'm okay if they're like not in the trenches building it with me, but as long as they're like supportive, that's all that matters. But I always thought it would be cool to like build something really badass with your spouse, with your partner. I feel like a lot of marriages don't work out because you're not building something together. You're not working towards the same goal together. You're not pushing the ball down the same field. And so I think it's cool that you and Sarah do that.
It's been a blessing, man. And honestly, she wasn't always super stoked about investing in real estate.
Really?
But
you were the one that was like on board first?
100%, man. And she wasn't involved for like the first 2 years. Like when we were just doing traditional long-term rental, she had no interest. But once we made the transition to short-term, she kind of found a part of that business that she actually enjoyed. And I think that was a big part of what allowed us to start building this together.
Yeah, I love it. So as you look out for the remainder of 2024, We got the rate environment that there's some news that it might be coming down here soon. But I'm curious for you, what is that one piece of your business that you're like, hey, if nothing else matters, I don't accomplish anything else between now and the end of the year, except for this one thing, I'll be good. What is that one thing for you?
Whew, one thing you're challenging me, man. Dude, I feel like I gotta give a couple, right? Because we
Okay.
got a few
All
irons in the
right.
fire. The Utah hotel really continued to stabilize that asset. We launched that like at the tail end of April, which sucks because like March, April, and May is like busy season out there. So we're kind of in the middle of slow season right now. So continuing to stabilize that asset, make sure we get through the back half of the year really strong. Continue to optimize our existing portfolio. I think one of the other things that I've identified is that sometimes you can be the own bottleneck in your business. And one of the things that I was still doing, dude, and we have 30 single family homes plus the 13-unit hotel. I was still managing price labs, like still managing the pricing for all of our properties. And I realized that I was actually doing this a disservice. Like, I don't know if it was ego or what it was. I was like, I should still be doing this myself, right? But we just hired someone to take on the pricing strategy for all of our properties. So continue to optimize our existing portfolio. And then I really want to find at least one more deal to purchase before the year is over. Almost have to at this point just for like tax purposes. But that's the goal, right? The hotel, stabilizing the existing portfolio, and then buying at least one more property.
Yeah. I can definitely vibe with you on the like being your own bottleneck. Like when the bottleneck is on me, or like when it's on me to get it done,
Takes forever.
it doesn't happen. And I tell the team this all the time, like, guys, when the bottleneck's on me, it's just not gonna happen. And so it's a good indication when like a bottleneck's on me and things aren't getting done that I need to delegate that one thing. But regarding the pricing strategy for the hotels, we just switched over from Price Labs to this new company called Price Point, and they do like 100+ AI pricing adjustments per day. And you guys should look into it for at least your hotel portion. We just brought them on to all of our hotels like about a month ago, and like all of our revenue has like almost doubled. Like it's
No
freaking crazy, dude.
way.
It's like they use like comparable of like what the airlines are doing for the pricing. And so definitely check it out. I'd be happy to like make the intro for you and that sort
Price
of thing.
point, I'll have to look
Yeah.
into it because the challenge with Price Labs is that it's built for single family homes.
Yes.
They have some hotel data in there, but it's not nearly as like detailed as the single family side. So I'll have to look
Yeah.
into that, man.
Definitely try it. I actually learned it from a few folks in our hotel mastermind. They're in the hostel space, and they've won like awards for like hostelworld.com, like best hostel of the year and that sort of thing. But they switched over to Price Point not too long ago, and they were like, "Yo, Rich, like you gotta check this out." So they brought me on call. They like showed me their dashboard, and they're like, "This is what we were doing prior to using Price Point, and then this is what we're doing now." And I was like, I saw the numbers, and I was like, "Dude, this is crazy."
That's
So I'm like, let's
wild.
try it. I'm down to try anything that could give us an opportunity to get better. We tried it in literally all of our hotels, like just the pricing, like literally overnight. You can compare side by side before we using them and now, and it's just like, dude, it's tremendous.
I'll have to
So
look into it, man.
yeah,
Price point. But let me shoot the question back to you, man, because that was a tough one for me to answer. What's the one focus for you and your business through the rest of
yeah.
the year?
So right now we're in Q3, and we just bought 2 hotels in the last like 4.5, 5 months. And so for me right now, I don't want to buy another deal right this second. I think it would be counterproductive because we're still stabilizing a lot of these deals, and we're going to be getting these assets, ready for a prime refi sometime next year. We got to get out of these bridge loans and that sort of thing. And I want to maximize the refi proceeds for the investors. So I think right now we're focused on stabilizing these assets, getting through the renovations, really, really maximizing that NOI and really dialing in the ADRs, driving the reviews and that sort of thing. And so I'm working a lot with our asset manager, Sarah. I'm working a lot with the management team and really driving that side of the business. Also dialing in the masterminds and that sort of thing. Now I do want, like you said, I want to buy one more deal between now and the end of the year. I think it's gonna be more of a Q4 thing. So probably sometime in a couple months, maybe like around September, October, sit down, get clear, do some brainstorming and figure out what that next asset looks like. It's definitely going to be a boutique hotel, but I really want to get clear on that search criteria and see. I mean, are we going to continue to do more of the same stuff that we've been doing, or are we going to go a little bit bigger? I don't know. Like I've had Tariq El Musa reach out to me recently. He wants to partner in a boutique hotel deal. He's like, hey, I'll bring some TV exposure. Brian Malarkey, who's like a famous chef. He's like all over the Food Network. He's got a bunch of like really cool restaurants. He's like, dude, I really want to do a fucking like boutique hotel deal. He's like, I'll bring the restaurant portion. You do the hotel, but this would have to be a bigger deal, right? And so I don't know what that next one looks like. I really don't. I'm like, I'll worry about it in a couple months. But that's kind of like what I'm looking at this year. The main thing is really stabilizing what's in front of us. I like to clear the plate before I move on to the next thing, if you would. And so that's kind of where I'm at. I just went through a phase like over the last 3 months or so where I just really dug in. I grinded, and I was just working a lot on the business and everything. And so now I'm like kind of just, I kind of like approach my business life in phases and seasons. So I'll sprint for like 2 or 3 months, level up, and then enjoy it for a month. And that's kind of where I'm at right now.
And reassess where you need to go next.
Yeah, I stopped drinking for like 76 days, and then I got back in the game 4th of July weekend. And it's funny because I was like, there was a period where I thought it might have been a forever thing because I was like, man, this is great. And then I just kind of like leveled up, and I realized I'm ready to get back in the game for a little bit, enjoy it. But the coolest thing was this, and this is the first time I ever took a pause from drinking, was I didn't realize how easy it was for me to do the 76 days. And so I'm going to enjoy July, enjoy August, and then as soon as the summer's over in September, I'm going to do another 75 days and just dial in and lock in again.
Yeah, and that's what's up, man. Dude, I've never, I don't know if it's because my wife and I, we've been dating since we were in high school. So like I never went through like that phase of like going out a lot. So just like naturally we're not, we don't drink all that often. But I appreciate hearing people saying like, hey, I know that I'm sharper when, when I'm not recovering from drinking too much the night before,
Dude, like it was really good for me because I never took a pause, but everything, like my business took off, my freaking fitness took off, like my relationships, I was a better leader. I was a better speaker, like everything was just more dialed. And then the energy was like tremendous. And so that's the one thing I noticed, like getting back in the game a little bit. I'm like, not as much energy. I'm not as sharp. I'm not as crisp. But the cool thing is like, I know now at any point I can like turn it off and like really dial in for 75 days. And so what I'm going to do moving forward is probably do this 2 to 3 times a year. I was actually just hanging out with Zeb, who's like the founder of ClickUp, and $4 billion company. The dude's only 35, but he goes through seasons where he'll take, 3 months off and not drink, not do anything, and just fucking really dial in. And then he'll enjoy it for a month, and then he'll dial it in again. And I really think, balance is key with everything that we do. So I think that's going to be like a new thing for me.
That's the theme for going into next year, right? But I think for everyone that's listening, it's like, if it's not drinking for the person that's watching or listening, what is that thing for you that you feel might be taking up too much time or holding you back? And it's like, how can you find a healthy balance with that so you can continue to put into your business, Like for me, sometimes I'll like delete Instagram and, I just won't be on it.
That way you're not scrolling.
Right, because sometimes I'll, like now, I think now I've gotten to a better spot where I'm not spending too much time on it. But like at one point, as we were trying to grow the business, you look at that little report that Apple sends you, and you're like, holy crap, I'm spending how much time on Instagram? It's like I would go through phases. I would just delete all the social media from my phone and just focus on like really grinding it out. So whatever that thing is for the folks that are listening, trying to find that balance will be important.
Yeah, I think that's definitely key. Are you guys have your own meetup, right?
We do. We're not as consistent as you, right?
No?
So
Okay.
we'll kind of do it here and there, and we'll kind of post about it when we do it. So I think our next one is potentially going to be in August in SoCal.
Okay. There's a lot of cool people in the real estate space that are in Southern California. Like you guys are in SoCal, Amanda Hahn, Carlton Dennis, Mikey Taylor's in SoCal. But yeah, it's cool to see. The meetup thing is cool. Like it's something that we do monthly, and we literally don't have guest speakers. We don't sell. We don't pitch. It's literally just pure networking, and it's cool to kind of see like people in the community like meeting each other, doing deals together, partnering, and it's really cool to see.
But you're in the cool part of SoCal. I'm like in the suburbs, right? So you got the waterfront. I'm a little bit more suburban dad.
Yeah, but you guys got some good stuff up there. I used to live up in the high desert when I was doing the air traffic control thing, and I mean I gotta say, man, those summer nights when it's nice and warm, the sun
it's
goes
beautiful
down,
out
it's
there,
like
man.
nice. You can see all the stars. Yeah, so you gotta throw a little love that way. But hey, man, I appreciate you coming down, dude. It's great reconnecting, dude. And again, I'm a big fan of everything that you and Sarah are building together. And I'm excited that you guys are in the hotel game, and I'm stoked to kind of follow your journey and see where you guys go next, man.
Rich, I appreciate it, brother, dude. Like I remember the first time we met, it was in Nashville.
Yeah.
And I don't think you hadn't even started the podcast yet,
No,
man. So
no.
I think the growth that you've had has been phenomenal, and I hope you give yourself credit for what you've built over these last couple of years, man, because it's phenomenal, brother.
I appreciate that, man. That means a lot. Tony, where can the folks get in touch with you?
Yeah, man. So on Instagram, Tony J. Robinson, probably the best place. YouTube, we're at the Real Estate Robinsons. That's pretty much the gateway to everything else that we do.
There it is. He's Tony Robinson. I'm Rich Summers. Listeners, thanks for tuning in. We'll see you in the next one. Peace.